Friends, let us start the discussion on previously tested questions in the topic of assessment procedures. See, you don't have many amendments in this particular area of taxation. So basically, our outlook as far as this topic is concerned, or the objective behind this particular discussion is to improvise your confidence in terms of how to answer irrespective of the fact whether you are coming to a correct conclusion or not. And by going through about 20 exam questions, probably you will be able to understand which sections are going to be most repeatedly be tested. So in that direction, how I ask you to jottle down the points is, open for each section 2 pages. I will tell you broadly, the whole discussion goes round the 7 to 8 sections. 2 pages is enough, because basically the questions are on what? Your 143 regular assessment, 144 best judgment assessment, then section 154 mistake apparent on the record and correction of it. Then there are certain time limit based questions, time limit to serve the notice, time limit to complete the assessments and all. Then on a revised return, belated return, return to be filed by charitable institutions and notified institutions. So in that context, what you do is, all the points which you should remember under that particular section, you try to jottle them down at one point. Other way around, nowhere our idea is to reproduce what is there in a standard textbook or in your study material or the practice manual. Our whole idea is, already we have done with about 15 hours of discussion on assessment procedures. Now we are only trying to quickly do it in about 2.5 hours on this previously tested questions. I have about 50 questions, and of course each question again comes with 1 or 2 bits minimum. 2 bits minimum means about 100 odd questions I have to crack it in about 2.5 hours to 3 hours. So here I require your perfect cooperation and patient listening. Of course, unless you sit in a spirit that this is the final time I am going to study this particular topic for my exam, it is virtually not possible. Now to start with, I am starting the May 2011 question. First, try to understand the question, that is, state whether the following assessee is required to file his return of income. We have 3 bits here. First bit is, a public charitable trust registered under the Act running an educational institution with an annual receipt of 65 lakhs and a total income of 3,20,000, is the accounts of the trust are liable to the audit under section 44 AB of the Act. That's what I am saying. When you go to the final, the questions are of more practical in their orientation. See, already all of you know that according to section 139 4A, if any charitable or religious trust before claiming the exemption under section 11 and 12 got its income which is a taxable income, then it is under an obligation to file income tax return under section 139(1). Of course, all of you know that for claiming the exemption under section 11 and 12, your section 11 and 12 requires such a charitable institution to get its accounts audited. Now the point of interest is, here first aspect which we are saying that the income here is about 3,20,000 rupees. Before claiming exemption under 11 and 12, it has got income which is exceeding the maximum amount up to which the income is not liable to the tax, so it required to file the income tax return. But now the point here is whether the accounts required to get audited. Yes, under section 11 and 12, necessarily institution in order to claim the exemption need to get its accounts audited. Now the question here is whether 44AB audit, they have to get tax audit under section 44AB. Friends, try to understand, tax audit under section 44AB is only required in respect of those SSEs who are carrying on the business or profession. But for a charitable institution which is running an educational institution, we are not saying that that is a business activity or a commercial activity, it is a charitable activity. So 44AB requirement comes only in a situation when there is a, what is it, business which is being carried on by the SSE. So on that pretext, what we are saying, although the receipts are exceeding 60 lakhs, still tax audit under section 44AB is not required. Write down these points. That is section 139(4)(a). Section 139(4)(a) requires charitable or religious trust, charitable or religious trust to file income tax return, to file income tax return within the due date, within the due date, that is 30th September. In case if the income before claiming the exemption, in case if the income before claiming the exemption under section 11 and 12, under section 11 and 12 exceeds the exempted limit, exempted limit. Next point, charitable trust need to get its accounts audited, need to get its accounts audited as per the requirements of section 11 and 12. Then most important point is tax audit under section 44 AB. Tax audit under section 44 AB is required only if the SSE carry on business or profession, Then friends, try to look at the second bit of this particular question. There is a registered trade union and the income from the let out property is 1 lakh. Whether that particular trade union required to file its income tax return. See, your 139(4)(c) says what? Your 139(4)(c) says what? Specified SSEs like research association, news agency, or university or educational institution, or a trade union, they require to file income tax return only when before claiming the exemption under section 10, in case if they have got taxable income. See, after all, trade union is an association of persons. There, unless the income is 1,80,000, crosses 1,80,000, there is no need to file the income tax return, because AOP will be assessed as an individual. For individual, what is the basic exemption limit? 1,80,000. So only when their income before claiming the exemption is exceeding 1,80,000, there is a requirement for that trade union to file the income tax return. This is under section 139(4)(c). Take the point, that is under section 139(4)(c), trade union shall file the income tax return before the due date, provided its total income exceeds 1,80,000, before claiming exemption under section 1023(c), under section 1023(c). Of course, the third bit also is more or less on the same lines. There is a public trust running a hospital. The aggregate annual receipts are 2 crores and it is availing exemption under 1023(c), and it has got a total income of 1,10,000. Do that particular trust required to file its income tax return? What we say, once you are an SSE enjoying 1023(c) exemption, the requirement to file the income tax return arises only if you have got income before claiming the exemption in excess of 1,80,000. Till such time there is no requirement to file the income tax return is a point. So the same point, so I am not asking you to again write. Then friends, I go to the May 2011, one more question. Read the question, listen the question properly. Is it valid in the law to rectify an assessment order under section 154 due to subsequent change of the law on a retrospective basis? Also state whether Supreme Court judgment would warrant a rectification under section 154 in respect of an order passed earlier by the assessing officer. Of course, 154 you have to keep at least 2 to 3 pages to jottle down all the points of 154, because out of the 50 questions I saw at least 10 to 12 questions are based on 154. So our objective is to write down all the points relating to one particular section at one place, so that helps us in a revision exercise. Basically one should be very clear with section 154. 154 is what? Rectification of mistake apparent on the record. It is not rectification of a mistake in the order passed by the assessing officer. What we are saying, rectification of the mistake apparent on the record. Record includes intimation also, friends. You have to remember, at appropriate place I will make you to write this particular point. Point here is mistake apparent. What that could mean is a point. See, Supreme Court gave a judgment. It's not what it made. It made a judgment, and it has got a effect on a retrospective basis. If that is the case, definitely such kind of judgment gives rise to a mistake in the order passed by the assessing officer. So under section 154, even such kind of situations you are asked to make the rectification, and there is a time limit to carry out that particular rectification, but in case to give the effect to the orders passed by the High Court and Supreme Court, there is no time limit. So write down, friends. CBDT circular. CBDT circular. A mistake arising as a result of subsequent interpretation of law. Subsequent interpretation of the law by the Supreme Court, would constitute a mistake apparent from record. Would constitute a mistake apparent from record, and accordingly if the SSC makes an application for rectification within a period of 4 years, 4 years, assessing officer should carry out with such rectification. Then friends, I move to the next question given again in May 2011. See, write the procedure relating to the recovery of the taxes which are in arrears from a non-resident and is there any limitations on such a recovery is the question. First we should understand the point that with respect to a non-resident, you are going to recover the taxes from his agent. Now the point of interest is, who may be treated as an agent of a non-resident? That is, any person who is employed by such non-resident, or any person through whom the non-resident is in receipt of the income, and similarly any person who is in possession or in custody of any of the assets of the non-resident. Similarly, any person who is having a business connection with such non-resident, such fellows will be treated as the agents of the non-resident. So the recovery proceedings of the arrears of the tax can well be initiated against them. Of course, before you treat anybody as an agent of the non-resident, an opportunity of being heard must be given to him. Then the next issue is, you are recovering from the agent that particular taxes. Agent having paid that particular taxes is having every right to make sale of the property of that non-resident and can recover the amount. Consequently, there could be some friction between the non-resident and that particular agent. In that case, that agent can ask you, sir, provide a certificate to me that this is the amount of the tax due, this is the amount of the tax which I paid, so I am going to get my first charge on the assets of that particular non-resident. Other way around, tomorrow what may happen? That non-resident may coolly say, who asked you to pay? Now the point here is, how much you can recover from the agent of a non-resident? Not more than what the assets of the non-resident which are in the custody of that particular agent. So these are the aspects for the recovery of the taxes from the non-resident is a point. Make note, because at least 2 to 3 times this particular question was tested. Write down. So in a general points only you write. Procedure of recovery of tax from non-resident. Procedure of recovery of taxes from a non-resident. Number 1, agent of the non-resident shall be deemed to be the SSE, shall be deemed to be the SSE, and is liable for paying the taxes on behalf of non-resident, Next point. The following persons may be treated as agent of non-resident. A, employee. B, person through whom income is received, C, person who is in possession, oblique custody of any asset, of the non-resident, D, any person who has business connection with non-resident, Then friends, next point. Opportunity of being heard should be given to such person before treating him as agent of non-resident, Then next point, for the SUM, sum paid by the agent he shall be entitled to recover the amount from non-resident. Then friends, if there is a disagreement between agent and non-resident, then agent may secure from the assessing officer a certificate stating the amount, Then friends, I move to the November 2007 question. Look at. First listen carefully the question. XYZ Limited is engaged in the business of manufacturing of industrial cables, imported a car on 26/2/2001 from the Japan, which costed in total 53 lakhs. Car was used from 1/3/2001 continuously for the purpose of the business by the company. The assessing officer in the month of June 2011, while completing the assessment under section 143(3) of the Act for the assessment year 2009 and 10, noted that the company had claimed depreciation at the rate of 25% since the assessment year 2001 and 2 on this car in a block of assets. Therefore, issues a notice under section 148 with that is read with section 147 for assessment year 2001 and 2 to 2008 and 9. What is this question, friends? Basically, today you don't have any distinction between the imported cars and domestic cars. Now, no longer Swadeshi concept is there in practice. But prior to 1/4/2001, if there is an imported car, in those days we are not allowing the SSEs to claim the depreciation on such imported cars. So depreciation on imported car is allowed if the car is purchased on or after 1/4/2001. Depreciation is not allowed if imported motor car is purchased before 1/4/2001. So in the given case, what has happened? The car is purchased on 1/3/2001, that is prior to 1/4/2001. So on such a car, depreciation cannot be claimed and allowed. Since they have claimed the depreciation, what the assessing officer says, there is an income which escaped the assessment. Now the point of interest is, can he take up the case for reassessment under section 140 by issuing notice under section 148, and can he take up the case for reassessment under section 147? What we are saying is, notice under section 148 can be issued for assessment year 2005 and 6 to assessment year 2008 and 9, and of course, since the depreciation claim amounts to 1 lakh or more, then the notice can be issued even after 4 years up to 6 years. That's what we have understood. What is the time limit for issuing the notice? It all depends upon the quantum of the income escaping the assessment, and also it depends upon what is the earlier assessment. And again, there we studied approvals are required or not. So what we are saying here is, assessing officer is justified in issuing the notice under section 148 for the assessment year 2005 to 6 to the assessment year 2008 and 9. The notice for the assessment year 2001 and 2 to 2004 and 5 is a time barred and invalid. It can't go beyond 6 years. Today what is the assessment year? 2012 and 13. So if you go back 5 and 6 bole to 5 and 6, 6 and 7, 7 and 8, 8 and 9, 9 and 10, and 10 and 11. But point of interest here is, in any case, beyond 4 years, that is the one which is prior to 2005 and 6 assessment year, that even 6 years time period is also gone. So that makes us to say they cannot issue the notice under section 148 for those years. Of course, the whole lot of discussion now should make one point clear in your mind. your examiner is interested to understand whether as a student you know what is the time limit for issuing the notice under section 148 to take up the case for assessment under section 147. What we say, normally the time limit is 4 years. In case if the quantum of the income escaping the assessment is more than 1 lakh, then naturally you can extend that particular time limit up to 6 years also. And another aspect that you have learned here is, that is imported cars which are purchased prior to 1/4/2001 are not entitled for, that is SCs are not entitled to claim the depreciation on such imported cars, but for the imported cars which are acquired after 1/4/2001, very well SC can claim the depreciation, right? But I am not making you to write anything here, because this time limit in some other question more clearly I will make you to write. But you should understand time limit under section 148 is very, to issue the notice under section 148 is very important. Then friends, I move to the May 2010 new syllabus question. See, the assessment of CNK Associates, a partnership firm, for the assessment year 2009 and 10 was made under section 143(3) on 31st July 2011. Assessing officer made 2 additions to the income of the SSE. One addition is 2 lakhs under section 40 small a 1a due to non-furnishing of the evidence of payment of TDS, and the second addition is a 5 lakhs on account of unexplained cash credit. SC contested the addition on account of unexplained cash credit in an appeal with the Commission of Income Tax Appeals. The appeal was decided in January 2012 against the SSE. The SC approached you for the suggestion as to whether it should apply for the revision to the Commissioner under section 264 or rectification to the assessing officer under section 154 as regards to the disallowance under section 40 A1A. What should be your suggestion? This is very important, friends. See, whenever an assessment order is passed, if you are not satisfied with such kind of the order, first what you do, don't just think of making an appeal, or just don't think of making an application for revision under section 264. First thing is, you can also think of whether it can be done with 154. That is, can you make an application for rectification to the assessing officer is the point. Now the point of interest is, let us suppose in an assessment there are 5 issues. Then let us suppose for 3 issues you have either made appeal or you have gone for a revision. Can the balance 2 issues can go for rectification under section 154. So what your 154 provides, where any matter has been considered and decided in any proceeding by way of an appeal or revision, then rectification can be made of any matter except the matters which have been considered and decided in an appeal or revision. In other words, rectification is possible only in respect to the matters which have not been considered and decided in an appeal or revision. So the point, already I explained the point, SC has already gone to the CIT appeals. So in respect to the matters which CIT appeals already pronounced, can one ask for rectification under section 154 or can one ask for the revision under section 264? The answer for that is, in respect of the matters which are already there before the appellate authorities, you cannot come for 154 rectification. So SSC should make an application to the assessing officer under section 154 for allowing the deduction disallowed under section 40A1. Section 264 provides that Commissioner of Income Tax cannot make a revision if the order has been made subject matter of an appeal. Therefore, in the present case, revision under section 264 is not possible since the order of the assessing officer has been made subject matter of the appeal to the Commissioner of Income Tax Appeals. So, the point here is point of learning. What is the point that you should keep in your mind? For you to go to 264 revision, it is very clear in the 264, that is, if you give up your right for making an appeal, then only your Commissioner of Income Tax regular will allow you to come for 264 revision. He will not allow you to play. हम उधर भी जाते इधर भी आते, वैसा थोड़ी बात है नहीं. 264 में तो very clear, you give up all your rights, then you come for 264 revision. As far as 154 rectification, what we are saying, in respect of the matters which are already there before the appellate authorities or which find finality with the appellate authorities, you cannot come for the rectification under section 154. In respect of the matters which are not there before the appellate authorities, in respect of those matters, you can come for rectification under section 154. This you please make note. That is, rectification under section 154, rectification under section 154 is possible only in respect of the matters, only in respect of the matters which have not been considered, and decided in an appeal, which have not been considered and decided in an appeal oblique revision. Then friends, write down the next point. Section 264 provides that CIT, Commissioner of Income Tax, brackets regular, brackets close, cannot make a revision if the order has been made a subject matter of appeal, As a final student, you should be very clear with this point. 264 is too sacred, because it is not saying that for 2 things you can go to appeal, for remaining 3 things you can come to us. ऐसा थोड़ी बात नहीं. Whereas 154 में that is possible. That is, you can go for 2 to 3 matters to the appeal. On the balance matter, you please come to us. Possible. So friends, next I move to the next question. May 2010, that is, Ankit Private Limited in its return of income claimed a sum of 40,000 as a deduction on account of payment for stamp duty and registration charges from the income shown under the head income from house property. Assessing officer disallowed the claim of the SSE company in the assessment order passed under section 143(3). Examine the correctness of the action of the assessing officer. Friends, this is not something greatly related to the assessment procedures. As a student, you might have studied the topic of income from house property. All of us know that only 3 deductions are possible under the income from house property. One is before you arrive at the net annual value, municipal taxes is allowed. Second is you have under section 24 2 deduction. One is towards repairs and collection, 30% of the net annual value, and the next one is a interest on capital borrowed for construction or acquisition of the house property. No other deductions are permissible under the head house property. So if anybody unknowingly claims any other expenditure, assessing officer is correct in his approach to rectify, that is make the disallowance under section 143(3) is the point. Of course, there also I am not troubling you to write. Now friends, I move to the May 2010 new syllabus. See, the assessing officer has got a power to make the assessment to the best of his judgment in certain circumstances. So what are those circumstances? Friends, try to understand the point here. Write about best judgment assessment is one aspect, and asking you to write under what situations best judgment can be taken up. First and foremost thing is what? If you are not doing something what you are expected to, I can make best of my judgment. Got the point? Then you should know what you are expected to do. So as an SSC, first thing is you have to file your income tax return under section 139(1). You are not doing it, or you have done it, but I issued a notice under section 142(1) requiring you to bring your books of accounts for my examination or for providing any further information. You require to file your income tax return under section 139(1). You are not doing it. So I issued a notice under section 142(1) requiring you to file your income tax return, whereas you are not cooperating with me. Similarly, I asked for some information under section 142(1). You are not giving it, or you have given it but not what I am asking. I asked you to get your accounts special audited under section 142(2)(a), and you are not doing it. I issued a notice to you under section 143(2) for scrutiny. To take up the case for 143(3), I am issuing a notice to you under section 143(2). You are not coming. So in all these situations, I can very well, that is assessing officer can very well do the assessment to the best of his judgment. But again, try to understand, if already a notice is not issued, then for you to take up the case for assessment under best judgment assessment, an opportunity of being heard should be given. Other way around, there is no such a requirement. So write down, friends, this is very, very important from the examination point of view. Write down, that is power of assessing officer, to make best judgment assessment. Number situations, side heading situations. Failing to furnish the income tax return, failing to furnish the income tax return. Number 2, failing to comply with, number 2, failing to comply with terms of the notice, issued under 142(1) oblique 142(2)(a) oblique 143(2). But in any case, try to understand, friends, assessing officer's right to do the best judgment assessment is not an uncontrolled right. मतलब क्या हुआ? Today myself and Sudipti is quarreling with each other. Sudipti, after this particular class, is going to the income tax department and says, Chakravarti sir is having some 3 crores of undisclosed income. Now they issued a notice, I am not responding to it. They can take up my case for best judgment, but not on a mere gossip. They can simply say that we are assessing your income to the 3 crores. That's not correct. There must be some material, relevant material should be there for them to say that I have got undisclosed income. So what we are saying is, assessing officer, after taking into account all relevant material which he has gathered, shall make the judgment assessment to the best of his judgment. On material facts which he has collected, he has to take them into consideration and make the best judgment assessment.